So it's 21, 21 of January of 2024, which is Sunday, and now I'll be doing the weekly review. Let me just put music a little bit lower and something like 30. Yeah, and I'll be doing the weekly review for this past week, which was week 3 of January of 2024, from the days of 15 to 19. Uh, and I think that the main takeaway from this week is going to be how could I have kept the law of the month, law of the week into the eye of the week. And coupled with that, I would believe that is basically the model, if I say so, the or basically the whole idea of trying to of what ICT trades. What ICT mentions that he always looks for the weekly drawn liquidity, and he tries to buy or sell based if the liquidity is an old high, hold low, old equalize, old equal lows, a fair value gap of CB, or a busy in this case, and he's trying to trade into those. So for me, I will start with DXY, then go into EU and GU like always, and I think that I will mention um, ES and NQ, which will be also a good study of price, even though that I'm not mainly focusing on these markets right now. I was a heavy futures trader, especially indices, where I spent 1 year entire studying S&P and NQ, but I'm now switching over EU for a because I think that it's where not I'm not better, but where I can trade better reversals in my opinion in the time element, because for me I prefer trading London on forex than trying to wait for the New York section. But going straight into the week of today, we had uh, not this. Okay, we had this news. So we had a lot of news for today. If we ignore the GBP ones, what can I see? I can see that we have no Monday is a holiday day, which is followed then by Tuesday 8:30 news USD. Wednesday we have two 8:30 news, red news. Thursday 8:30 news, and then Friday 10-hour OST news. With that, I can see that we have the GBP news at 2 hours on Tuesday as well, 10 hours, which doesn't really matter for me. Just tell me that it's basically a manipulation or continuation level. Then on GBP, on Wednesday, we have another 2 hours news on CPI, and I will talk about how the CPI was irrelevant because of the current market delivery. And I think that because it's GBP USD, the pair is based on US dollar. So it's good to see if there's any news for the pair in itself. So if there are any news for Euro or GU, and possibly if I check Euro GBP, I think that it's possible to see some crazy movement at that currently time. I would say so, but I'm not going to mention this because I'm not the best at talking about it because I never check Euro GBP. Uh, but with that, I think I was looking for. This is me mentioning that I think that the DXY is going to continue higher, dig little deeper into this order block or into this dealing range. Basically, I'm looking for price trading to a premium of the previous year range from year 2023 low, 2023 high. On monthly short term setup, I'll look at this December high as a potential drawn liquidity for this January. Or if January doesn't reach into the drawn liquidity, I'll be expecting it to be 32 in this first quarter of the year of 2024. This is a 2 week fake intermediate mine because it's a very shallow run, an IFT in some sense, where I do not believe that. But I do believe if price trades above it, then two, only two things can happen above this high. Either a change in the state of delivery, and then price trades higher into this accumulation, reaching into the CB, which are highs below a PD array. So, fair value gap, buy side, displacement, retracement, continuation. That will be a valid idea. Or price trades here and then reverses on the downside, taking the equal lows of DXY. So basically, for this yearly candlestick, I think that uh, yearly highs and lows from the previous year of 2023 are a very high likelihood of being traded to. So I said that we are currently on the second candlestick of the monthly PO3 charts, open, low, high, close. By this I mean that we are on the second half. So first half, week 1, week 2. Second half, week 2, a week with week 3 and week 4, which is tomorrow's candlestick. I expect that price has made the first half low, so I expect that price as the low of the month in. And now in the second half, I would like to condition higher, meaning that I would like to see price continue on the upside, reaching into this drawn quit. So if I want price to reach into higher prices and I have this monthly drawn liquidity, this means that this weekly drawn liquidity, which was my weekly drawn liquidity, which was week 1 high as my drawn liquidity for this weekly power of 3 or this weekly range. This means that if indeed the monthly drawn liquidity is reached, we want to see the weekly high being broken. And that's not basic sense in some sense, but it's normal to see. So if you want to see this high traded mission that we want to see this high traded to as a yearly or a drawn liquidity or a 6 month drawn liquidity, then this would mean that this month drawn liquidity needs to be traded to unbroken and then followed by a continuation. So for me, if I really want to see a week 2 continuation into the monthly, into these equal highs, then I want to see a weekly, not purge, but break of market structure and then continuation on the upside, reaching into the monthly drawn on liquidity. This let me mention that even with this range from the 2 week from the first half low to the first half high, which was the entire week 1 candlestick, I mentioned that I was not looking at the discount of week 1 and that indeed I would like to see the SPSY stay open and price delivery on the upside. I mentioned that we have this intermediate low respected, that price is breaking above. This was also made on Monday. So this was not made on Sunday before the market opened. This was made on Monday as well. So this was Monday first 12 hours, which are then followed by the Monday second 12 hours, which makes the Monday candlestick on itself. You can see the time right here, or maybe it's already made. So this was the first. This was maybe the first candlestick of the. No, this was Friday, Sunday. Yeah, it's Sunday, and this was sorry. This was Friday, week 2 Monday, week 2 Tuesday, week 2 Wednesday, week 4, week 2 Thursday, Friday, and then with the daily chart. It's the daily chart on 12 hours. I'm sorry, 12 hours. The one day, Monday, basically the Monday candlestick on itself. This me mentioning that because you're on open on second half, one of two things can happen. Either the first half high is dominant and priced its trade lower first into key level. This means that open, I think it's here, open, low, high, close of the first half is dominant. And then you need to see a open, trading a little bit lower, high close, which is high likely. Or the second half opening is going to deliver on the upside from the Friday low, low on the upside. So that was basically what I coupled with my narrative on the daily chart, where I mentioned on the weekly chart where I mentioned that I was not looking at this busy, followed by this intermittent low being respected and not being traded to, and then by this market structure where price traded back above of this uh, bearish candlestick, where if we are on a bearish model, we, if we were in the downtrend, this bearish order block should have rejected price on the downside. Follow my cursor. So if I studied back to it, then we would like to see price reject lower. But because we acknowledge that the shift and the change in state of delivery has been made, then we want to see this order block, this bearish order block, be a place of accumulation and distribution on the upside. So you see price breaking above it, and then it's highly likely that it's going to continue on the upside. So because this month has been spent on delivery, I will wait for a monthly close trade trying to catch the eye of January. True, coupled as well with daily and so if you're having a rough time catching a monthly low or a monthly high trade, because there are three trades on a candlestick. There's the open low trade, from the low high trade, which is OTE to then continue. Then we have the high of the month trade. So there's all this in every single candlestick that you try to trade. Doesn't matter. Just that there are just possibly three trades. But on the weekly, there are also three trades, daily three trades, 4 hour candlestick three trades. The idea is that if you can't find a clear monthly drawn equity, I think that you shouldn't even try to trade into the low time frames. So if you don't have a monthly drawn equity or a clear bias for the month and the week, then there's no reason to try to trade the daily reversals. This is mentioning that I really believe that anything is clear on the present moment, but I'm aware of tonic pieces as previous low as well as price as close to the high above the one. This is me just talking about probabilities, where we are right now, not 50%, but like 55, 45, where we had price trade in a range, accumulating shopping traders, but even though that we are in a range, this intermittent low has been respected. And this is my basic. If this range gets broken, I will trade above it, then I will be willing for a possible long. So that will be Friday, Friday premium week, consequent encroachment, traded 2, retracement, then the continuation. This is me mentioning that on Euro, on Forex in this case, on the USD, EU and GU, I used the news calendar to place myself in the best possible days. Where, because I don't have a clear level narrative uh, to engage because price is not clear and as I would like, I can use one of weapon of my arsenal, which is the news events. Looking at this week, I can see a lot of movement, especially on GBP, meaning that GU is going to make a lot of move on the London session. So on Tuesday and Wednesday, I believe that London reversal is very likely, which I'm going to study today, which is another point for today. And I think this is all we're mentioning about that. We have this you can see the rejection block 32, but we have this gap lower on GU, which indicates bearishness. And I think this was all. This is the weekly drawn equity at this low, which is an inverse drawn equity from the XY. The XY I was expecting highs to be rich, EU I expect lows to be rich. And this was all. Another point I want to study today is this Tuesday continuation candlestick, which is actually a Tuesday reversal candlestick, which is going to be not the weekly reversal, the weekly move, because weekly move we started to catching the Monday high into the weekly drawn equity, which was the weekly high to weekly low, but I will try to talk about this Tuesday trade on itself because it was a trade that doesn't does fit my model and my idea to try to trade the candlesticks as I like. We'll just do a little pause and I'll be back. So, back to DXY, making it fast. One thing that I already mentioned is uh, the monthly power of 3, where we had this week 2, which is basically the week 1 range from low to high. Price on the second candlestick of the month, which was inside candlestick, consolidated and made this choppy candlestick, which we saw on the low time frames, and then this is followed by today's candlestick, week 3. On week 3, I can see that we had traded to a discount of the week 2 and then we expanded on the upside. So notice how even using the dealing ranges, the standard deviations, we can see that everything indicates us that our prices are likely to see traded to. Coupled with that, a lot one of my confluences on this bullish trade into the equalize was that everyone on Twitter was looking at this pattern trading of internal external range liquidity. So everyone was looking at this, and when everyone is looking at something, looking at the other side. This is basically me anticipating a bearish PD array to be violated because there's another bearish PD array. So look at this yearly range. This is a. Do you think that this is a bearish, a valid or a high probability bearish PD array? No, it isn't, because it's in a discount, so it's high likely to be this is violated in this case and to reach higher into a valid bearish PD array where a retracement or reversal can be seen. So this was my monthly bias, where I already mentioned my monthly drawn equity after this monthly low, which was not impossible to catch, but you will need to catch the open low close of December. What I mean by that, and this will be the last thing that I'll talk on the monthly chart, it will be that you will need to catch the low close trade, which was a low close continuation of the next month. So let's talk about December, where we have December opening, right? Trade on the upside, close. Now I will change a little bit, make the equalize the lower, close, high, close, this little eye, and then the close. So this is the December candlestick, and I'll just make this a little bit shorter because I don't think it needs to be that long. It's not perfect, but that's not the idea to be perfect. It is to explain better logic. So this was the December candlestick from December high to December low, week 1, week 2, week 3. So December 2023. And what can I see on this candlestick is that the low, so where the open eye low close, so was the open, it was the eye of the month, and this was low of the month. Followed then by the close of the month. And this low close, which is also always a valid trade, try to catch the month. So like I mentioned, only 3 trades on the candlestick. One, try to catch the open high slash an open low trade. meaning that you try to catch the law of the month, law of the uh, law of the eye of the month slash law of the month, aka reversal. Two is you try to catch the OTE slash continuation with couple with the opening price support slash resistance inversion and a continuation turtle soup. And then try in this is the journey from the low to high, or I, let's just make it like respectively in order. So if I've opened I, then it will be a I close slash low close trade. It's basically trying to catch the old movements from the candlestick, and I will mention what those will be. And then we have the third, which is try to catch the closing, try to catch the low close or I close trade, meaning that you try to trade the thank God it's Friday pattern, which is the opposite end of the candlestick trade. So this will be trade 1, this will be trade 2, this will need to be a better OT, but let's make for sense that this is enough in some sense. There is one more candlestick, right? 1, 2, 3. Yeah, I made one more candlestick by mistake. Let me just make this again. I'll pause and then I will come back so this isn't that longer. So this will be basically the monthly high, monthly lows, and we will try to catch this like OT in some sense. And what I want to mention is that this trade, so to try to catch low close slash I close trade, you need to try to catch the thank God it's Friday pattern, which is the opposite end of the candlestick trade slash second reversal of the candlestick, because the first reversal was this one, making from I, then with the reversal where the buy sell model was imposed, then we have this reversal then when the buy model is imposed. And this buy model, what can I see is that this my buy model was then followed on January, where we open, made a low, traded higher, close, followed by a choppy candlestick. On week 3, we open, trade a little bit lower, then we expand on the upside. January 2024. So this third trade was a continuation then on January. Week 1, week 2 shop, week 3 expansion into the weekly drawn liquidity. So now back into my idea. For this week, I was looking at this CB to be invalidated, and to this weekly I to be rich. This week one I to be rich. On daily chart, we had Monday make this low. This was followed by the Tuesday. Like this was a scammy week. Like you can see, scamming everyone out of the marketplace. But you can see the XY Monday expanding higher, followed by this Tuesday new day opening gap continuation into the drawn equity, which was this week one high once again, and that I was and which was also traded to on Euro USD, where EU also reached into the weekly and the monthly drawn equity, which I'm going to talk about very shortly at this time and place, I would say, on Tuesday itself. This is followed then by the Wednesday, Thursday, and Friday, which is the second half of. So the first half is made from Monday open to Wednesday 5-hour candlestick on EU, and which is DXY 7-hour candlestick at 7 a.m. And after that, we had this small candlestick trading on downside, which I would not be interested in. But if I was actually trading this week, and I'll catch the Monday low, or I catch a week to shop low with this Friday to midterm low, then because of my imagine that I catch this trade, and it's a 2R, uh, almost 3R trade. Would I close this trade entirely at this high? No, I wouldn't, because if my idea is to try to catch these highs, this monthly draw on liquidity, then I want to see this high broken, right? Or if I want to catch this equalize, then I want to see this week one high broken. I want to see this monthly drawn liquidity broken, and I want to see everything broken until its price reached into my high time frame down liquidity. That would be That's how you can distinguish where you should take a partial and then should hold a little bit more the trade. Because when to take a partial, when there's a high chance of a reversal. If you identify that this is not likely to be a reversal, but possibly this monthly is, then every single every single PD array that's made, it's going to be broken, and you want to see it broken. Or else you are wrong, and instead of this being a bullish model into a premium, so low time frame order flow, this is actually bearish, this is actually bullish order flow into a dealing range that will then continue on downside. But everything from standard deviations, time, uh, pattern, everything that ICT teaches and everything that you study is indicating that indeed this monthly drawn liquidity should be reached, not it's a high chance, high probability. And if this high probability, then these weekly highs are meant to be broken. These daily highs are meant to be broken. I'm not expecting a reversal at these highs. So on the 12-hour chart, I would you can see this scammy week. It's impossible to try to catch this weekly. That's why I don't trade the XY. I just use it for analysis, and I spend a lot of time on the XY as opposed for EU studying it, because the XI is mainly it's a chart that moves a lot, not moves a lot, but it's a chart that basically is dominant on the EU, because EU does the opposite of the XY. So if you study a lot of the XY, you're going to understand how EU trades, and you can inverse your thought process on the XY on EU. So you can see that we have the Monday opening into the weekly open to the weekly close. We have the weekly half candlestick at 7 a.m. on Wednesday, and we had pressure on the upside on Monday. This is followed, so we have this 2, 2, 2. So this is Monday candlestick. I'm going 1 second. So back to the charts, what I can see that I have Monday candlestick followed by the Tuesday. This Monday candlestick followed by the Tuesday candlestick, which is two candlesticks because it's two 12-hour candlesticks. Wednesday candlestick, Thursday candlestick, and Friday candlestick closing the week. With this, where I can see that on Tuesday we had this equal lows slash SMT made, and even though that this was manual intervention from, let me just put some manual intervention with this is not usually to happen when we have a new day open gap on the upside and then it's followed by a quick and sudden movement on the downside, right? If I go into the 15-minute chart, you can see that this was a week at the 20 candlestick, 8 p.m. candlestick in this case trading lower. Even though that we can't expect that and predict that, we can use that in our advantage. But if you compare this to EU, we can see that EU did not make that week on the upside this Tuesday week. This Tuesday week was not met, so we can use this as an SMT. So it's the same thing as sometimes where we have SMT at um, CPI or FOMC. Yes, it's a manual intervention, but we can still use it as a confluence and intermarket analysis. So this is basically what I'm trying to say. Going lower into the graphs, I don't think that it's more necessary because now I want to study the EU trade, but I can see that we have the daily reversal. That is the weekly reversal at this order block, weekly reversal. And then we have also this weekly reversal right here. At least for our order block. So we had this weekly reversal slash low. And this weekly reversal slash high. And this high was made on the Wednesday 7-hour candlestick. 7-hour, 4-hour candlestick. And the low was made equal lows at Monday 21 4-hour and Tuesday 19 4-hour. This is basically where price made the low of the week for week 3. This is where price made the weekly high as the low high of the week. It's also actually coupled with my idea of the breaking above it. And then price use this as a continuation on the upside. On 2-hour, there's nothing I can use as an entry point. I can maybe use this right here, just like this, and then could try to. I think that this is not the correct one. Yes, it isn't. It will be like this. And I could try to use this as a inversion premium week or something like that. But because it was really hard, just on Tuesday, the only way was to try to catch the Tuesday low of the day. at this fair value gap, which is actually the same trade I'm going to study on EU. This Tuesday low of the day trade was the only possible trade before the weekly tranquility was traded to. This is the same trade that I want to study on EU. So this was the only available trade with the 2-hour low of the day for Tuesday, and then the continuation on the upside into the weekly tranquility, and then icon old higher. But why don't I buy Monday, or why don't I buy on Monday or Tuesday? Because like I can see, it's normal, not normal, but sometimes we have this scamming week where if I imagine that I buy this on Monday, then I expect continuation higher, then my stop loss is taken. So this was the best place to buy, was on Tuesday for this weekly continuation, which was Tuesday low. So this Tuesday low reversal on the upside was this weekly continuation on the upside. Let me just see if I took a print of this. No, I didn't. And that's all for DXY. Was a lot, but now I can go straight right into tomorrow, into EU. It's late for me. I'm talking this late is kinda, yeah, that's it. No excuses. So going into the EU, we can see the same market structure slash inverse profile from DXY to EU. So if my DXY drawn equity is a week 1 high, then my EU drawn equity is a week 1 low. These are actually coupled with another monthly drawn equity, which isn't this order block, but it's a low time frame equal lows. And I was anticipating that we'd continue on EU on the downside. Coupled with that, we can see same thing here, where price traded into a premium of the week 2 rangy candlestick, choppy candlestick, and then we continue on downside, delivering lower. On the weekly chart, I will try to put both, so I can see that if there's 4 candles, so notice that I'm not using the time range from day 1 to last day of the month. I'm especially using only 4 candlesticks for weekly candlesticks. So that's how I can have a perfect medium. So that's why the week 3 opening price was the same as the half slash second half of the month opening price. But if I extended this into the actual last day of the month and not for candlesticks for weekly candlesticks, then I would have Tuesday as the middle candlestick opening the second half of the month. This is because you don't want to, not to trade, but you don't want to use the this Passover weeks, because from Monday 29 the week only ends on Friday 2, which is going to, so Friday 2 of February, and then the first Monday of February is going to be the 5th of February. And that idea is that on these Passover weeks you can try to find something, but it's not the best idea to try to find those trades, because Passover weeks are not usually good to trade. There are a lot of shop or a lot of expansion, and the ideas don't pan out really good. So let me just deactivate the monthly 5th time zone, and you can see that we have the weekly dawn equity at the same on downside. My objective for this week was in confluence with the monthly drawn equity, and this is where the best weekly trades uh, not function, but where you can find the high probability trades, where you have a high time frame draw liquidity, and then you have also in the same direction a monthly or a weekly or a low time frame drawn liquidity. So imagine that this is a daily candlestick. Imagine that it's a 4-hour chart and these were daily candlesticks. Imagine that this was your weekly drawn liquidity and you had this Monday low as a drawn liquidity. So you want to place yourself in places that you have high chance of winning. And when you have a weekly drawn liquidity and a monthly drawn liquidity, you are in a very high probability trade. Same thing if you are in a day, and that day is likely that you're going to trade into a daily drawn liquidity, into a monthly, a weekly, and weekly. That is also a very high probability trade, because as we know, a, a candlestick, imagine this is a monthly candlestick, doesn't form always like that. We need sometimes uh, a weekly drawn liquidity. So imagine that this is the weekly drawn liquidity, is a monthly key level to then reverse and then to trade lower on downside for this example. So they need to be, so these weeks, especially on week 3, we have the weekly drawn liquidity in the same direction as the monthly drawn liquidity. What I can see is that Monday made the high of the day, high of the week, followed by the Tuesday big large range into the weekly drawn liquidity and into the monthly drawn liquidity, and was basically the day that we wanted to focus on. Then Wednesday, even with GU CPI, there's no need to try to trade that. And then I had a Thursday tape reading session where I catch a 2 hour, but that's not the ideal. The ideal is that's for the weekly candlestick, for the weekly range on itself. We went to place ourselves in the first half where we had the Monday high and then the Tuesday continuation lower into our key levels. After that, we can see that this monthly drawn liquidity is currently forming a possible monthly low, and that right now it's high likely that price can trade on the upside, or I need to study and see what's going to be more high likely to happen next. On the 12-hour chart, I can see that we have the Monday candlestick. So Monday 12 hours, Monday second 12 hours, Tuesday 12 hours, another Tuesday 12 hours, uh, Wednesday 12 hours, followed by another Wednesday 12 hours, second half, Thursday first half, Thursday second half, Friday first half, Friday second half. And the whole idea is that this is the best place to sell. Best place to sell slash weekly premium week. And now the discount week goes from this close to this low. Best place to buy weekly discount week from the weekly low, weekly close, open, weekly open, weekly high. Now going to the low time frames, the move that I want to talk about is in Tuesday, and it's actually this continuation of Tuesday where you have Tuesday first C1, so this is the first 8-hour candlestick of Tuesday where it expanded on the downside, followed then by this 8-hour second 8 hours, so second candlestick of 8 hours of the day, continuation into the drawn on liquidity and into the weekly down liquidity, which is then followed by the monthly draw on liquidity. So the whole idea is that on Monday, so the Monday candlestick, the entire range of it from 17 to 17, we can see that we had the so-called Asia expansion breaking these lows coupled with the SMT right here, followed then by this 1 hour retracement slash manipulation of the day through open right here between these two candlesticks through open, followed by this rally higher as a Judas swing, and then the delivery on the downside. Weekly drawn quit traded 2, which originated this retracement on the upside into this fair value gap to then continue lower into the monthly draw on quitting. On the hourly chart, we have the weekly open for daily open for Tuesday, and I can see that we have price trading below this previous week low, which was week 1, so week 2, sorry. This was week 1, closed right here. Then we had week 2, this entire candlestick. So this week 2 low originated this expansion on the upside, respecting this intermediate RMI, which is a CB low. On the 1 hour, it's a 15 minutes intermediate RMI, and then the price continue on downside. This trade right here will be an awesome trade for me, with a very valid risk to reward tool, with a risk to reward and return. Man, I can talk today. It's very early morning. So this will be the whole idea for this Tuesday candlestick on EU. Then after Tuesday, so Monday, high of the week, with this reversal point. Which is a rejection block. Weekly reversal, high of the week. And then we had this weekly reversal, low of the week. This was made on Monday, Sunday 21 as the range of Monday, and this was made on the second half. So first half we made the high of the week, second half we made the low of the week, which isn't the usual candlestick that I like to see, but it's a valid candlestick as well. What I mean by that, I mean that we have this entire candlestick, right? Imagine that this is also a premium week, and we have made this weekly trade, right? So this is the week opening price, week closing price, or weekly closing time, whatever you wanna say it. And we have this first half of the week, which makes this candlestick, and then followed by the second half of the week, which is a continuation of the first half trend. This would mean that from this low close, we would like to see a open, high, low close. So bearish candlestick on the first half, followed by another bearish candlestick on the first half. And that is not seen, unfortunately. So instead, we have a bullish candlestick where we have the opening price, and we trade lower first, making the low of the first half, second half, and then we trade higher, making the low high of the second half before consolidating and closing this as a bullish candlestick. So second half open, second half close, first half open, first half close, and you made the open, high, low, close, followed by the open, low, high, close. Instead, I would like to see an open, high, into this possible reversal point, low, close, and another bearish candlestick for this month. This will be a great idea, but it didn't pan out, and that's fine, because my weekly drawn equity and monthly drawn equity was already traded to and drawn to, so there was no need to try to push the button after the on the second half of the weekly candlestick. So that's all for EU. GU is the same situation basically. The old difference is that once it traded into the monthly drawn equity, which is actually the same price level with weekly lows. We immediately reversed with 3 down close candles, followed by the intermediate RMI broken, retracement, and then have price trading on the upside very slowly. So we immediately, after reaching into the drawn liquidity, we can see that this is a possible and a very high likely reversal point, and price expanded away from it. So every drawn liquidity can be a key level for a reversal, and every key level for a reversal can be a drawn liquidity. That's why there are two ideas of a trade, which is the first trade, which is the journey to a key level, where at the key level, so at the key level we expect a reversal, so you need to take off your entire trade or a partial. Then you can trade the key level on itself. You can wait for price to reach into a key level and then to wait. So what I mean by that, I'm not saying that this is the low of GU, but imagine that this is the low of the month for GU, right? You could, and you were expecting a bullish candlestick, so you could wait everything from the, let me put 12-hour chart. So everything from the opening price of this monthly candlestick, you could wait everything out, and this drawn liquidity, right, will be a possible key level, and you will trade this key level. So you'll enter right here instead of entering from the journey from this opening time to key level. So that's basically the easiest way to explain, is that you can, as the city says that the price only goes to highs and lows and fair value gaps, you can trade a price extending or returning into a fair value gap, or you can trade the fair value gap on itself. That's basically it. On ES and NQ, I don't have a lot to talk about, but I can see that we have this SMT with ES and NQ, which was followed by price expanding on the upside, where I was expecting it already to reach up into this high of the year of the previous year. Why? Because it was an unlikely trade where everyone was trying to catch a short, everyone is trying to catch a low, everyone's trying to catch a high, everyone's trying to catch those, highs from here to lows right here. Everyone tries to catch it at high time frames tops. So what I mean by that, give me a sec. Man, I can't really talk today. I'm like, my voice is not going as I, but it's fine. The idea is that why would I be aiming from these highs, not shorting those as is pattern of breakout market structure or breakout and then continuation? Because that's what everyone is doing. Everyone on Twitter was trying to catch these highs, and you can check, everyone's trying to catch these highs and lows on the DXY. And that's not the way to go, because you don't want to catch high time frames highs and lows. Yes, you can, but for you to catch an time frame high or low, you need an SMT, and that's my only way to try to force myself into these, not conditions, but into catching an high time frame high or low. What I mean by that, look at ES and NQ. What can you see that make 2021 high and an SMT? So if you want to indeed catch an item frame high, item frame low, so weeklies, monthlies, highs and lows, you need to check for an SMT. I'm not talking about weekly reversal. I'm trying to catch the reversal of the week. I'm explaining to catch this like previous year's highs, previous 3 months or 6 month highs, low or lows. You need to have an SMT forming to give you a better confluence and a better understanding of price. In my understanding, and I not demand that, but I want to see that. So everyone was trying to short this as a low time frame market structure shift, and the break of market structure was catch out by this fair value gap, and where price continue on the upside. So that's basically it for today. I apologize for this. Like, I don't know what's happening with my voice. Maybe I need to eat. drink more water. But yeah, that will be it for today. And that's all.